Is this bud for you? Today on The Investment Advisor, I want to talk to you about Anheuser-Busch. Now, Anheuser-Busch was the trade name of Budweiser in the United States, but it means a larger conglomerate today than simply the American beer. It's Corona beer in Belgium. It's a lot of beers in Africa. It's got a big position in Latin America. And why is Anheuser-Busch worth our attention? It's worth our attention for two very simple reasons. It pays quite a large dividend. In fact, it probably pays too large a dividend, even though they had a dividend cut. And the stock is trading way down. So it could be, for some of you, an opportunity. Let's have a look at the chart and we'll see what I'm talking about. You can see up here, the high was about $130. This is in ADR US dollar terms. Now it's trading down around $75. That's well below where it's thought to be its fair value, market value is. Is it a buy? Here's the problem with Anheuser-Busch. They have a lot of debt. They've made a lot of acquisitions, SAB Group, some of the others. They've borrowed a lot of money. On the balance sheet of Anheuser-Busch, and I don't want to get too technical, there's a lot of intangibles, a lot of goodwill. So you could argue that they've reached for the stars. They've paid out a lot of money to make these acquisitions. It's cut into earnings, and it means the company is struggling. So 130, 2 or 3 years ago, down to 75. That said, I think the Anheuser-Busch management knows what it's doing. They sell beer. They don't do a lot of other things than selling beverages, but mostly they sell beer. Problem with selling beer is the price point is what we all know it is. There's not a lot of pricing options when it comes to buying and selling a bottle of beer. That said, if you bought in and you get somewhat close to the bottom, 75, 65, I don't know where the bottom is on Anheuser-Busch, you get a nice yield. You got a company that has a lot of cash flow, almost $10 billion a year in cash flow to service this debt. And you get a dividend that, even though they've had dividend issues, and I still think the payout ratio is way too high for a company like this, it's still a substantial yield. So yield, growth, well-managed company in a sector selling beer in Latin America, Europe, the United States, Asia, you could do worse. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.